Well, I can tell you there's a lot of excitement around here because TradingView.com just put my Knoxville divergence indicator and also these Booker reversal tabs right into their charting platform. So it's like having me right inside of your charts. Rob, it's not like having you right inside of their charts. That's actually a ridiculous thing to say. All right, so I can't say that I'm right inside of their charts. So whatever, right? Okay, fine. Yeah, that's correct. That would be ridiculous. You can't put a person like inside of charts. You can't do that. All right, so apparently, stand corrected. I can't go inside your charts, but you can see Knoxville divergence and reversal tabs right inside of your charts on TradingView.com. Their charts are web-based, so the indicators are going to follow you wherever you go. Your chart setup's going to look the same across a bunch of mobile devices and whatever computer you're using, and you don't have to funkify or mess around with a bunch of indicators or a bunch of drawing lines all over stuff, and you don't have to put your indicators at the bottom of the screen. It's all drawn for you. It makes the identification of reversals for counter trend trades and pullbacks inside of trends super easy to do, and it's just $19 per minute. That would be $27,000 a day. Well, that sounds about right to me. Okay, so it's not $19 a minute. It's actually $19. Let's just make it $19 a month. It's going to take me a lot longer to make $27,000 from that. But for $19 a month, you get these two indicators that help you time reversals. You can use them in the stock market, in the currency market, in whatever market you want to identify. You know what we should do? We should just cut right to it. Let's jump on over to the charts and let's take a look at how this whole thing works. All right, so the first thing that we do, alrighty then, let's just try that one more time. Let's make the chart a little bit bigger, and we're looking at Google on the 15-minute chart. Goog, maybe that's how you roll, and that's what you like. What you do is you go up to indicators on your TradingView.com charts, click on Rob Booker, and then you choose Booker Knoxville Divergence and Booker Reversal. Once you choose those, you're going to get some lines and tabs on your charts. These red lines above or below the candles or bars denotes divergence. Lines on top are bearish signals, and lines down below are bullish signals. And what you want to look for are times and places where you get the bearish divergence and a red tab, signifying an impending fall, or bullish divergence. Woo! Woo! You get bullish divergence and a green tab. I'm going to show you using Google just how this methodology works, and then once you get the indicator, we're going to do some webinars and some training for you to really help you make a lot of money from this stuff. So Google goes divergent here, bearish divergent, and a red tab shows up. So we'll grab our horizontal line tool and we'll draw a horizontal line underneath the candles where the red tab was, and we'll sell as soon as Google falls through that level. You can see we could sell short, we could buy a put, we could do a little dance, make a little love, get down, and make some money. Over here you see bullish divergence and a green tab. So we'll draw a resistance level above that green tab, and we'll buy it if we go above that resistance level. Look at that. Do a little dance, buy a little Google at 880, and ride that bad boy all the way up. All right, here's an example of a red tab, but there's no divergence at that time. You see that? So we don't do anything there. Look at these divergences. No red tab, no trade. No red tab, no trade. No red tab, no trade. So you don't take a trade if you don't see a tab and divergence together. Let's cut this and let's go over to a currency pair. Hold on just one moment. And now we're on the US dollar Swiss franc. Welcome over here to Currency Trader Land. We see some divergences down below here. You see a lot of divergences plotted. I'll tell you why in just a moment. Lots and lots of divergences plotted. Then you see a red tab for a sell trade. We don't want to care about that. And then you see a green tab for a buy trade. So we've got our divergences and we've got our green tab. And we grab a horizontal line tool and we draw a horizontal line over that level where the green tab was. And then we buy on that breakout and we ride that puppy upward. And that's delicious. So we look for places where there's divergence followed by a tab, and then we draw our line. Sometimes divergences aren't followed by a tab. Sometimes there's just divergences and no tab at all. So let's pull up like, I don't know, British pound US dollar right here. So I've got a trade right here, and you can see that there's divergence, there's bearish divergence here, but no tab over here to the right. I can just draw a level of support using a horizontal line tool, or I could draw a trend line underneath these candles, and I could sell it below the trend line or below that support level. This is a highly probable system that times reversals. Well, maybe you like this upward trend and you only want to buy it inside of this upward trend. Maybe you don't want to sell a bullish trend. Fine. Fine. Nobody said you had to do it. Jeez. Friggin' A. So you drop down to the 5-minute chart at a time like that. And inside of that bullish trend on the British pound US dollar, you just trade all the green tabs and all the bullish divergences on that short-term chart. You ignore everything else. So here on the British pound US dollar 5-minute chart, you see a green tab there. You see a bullish divergence and a green tab right here. So you go to that 1-hour chart, you say, hey, the trend is up. You drop down to the 5-minute chart and you just start buying the crud out of this as it goes up. There's a lot of money in that. So you could be a trend trader with this. You could be a counter trend trader. In general, you're just going to be a better trader. Let's just whip through a bunch of these examples in rapid succession. All right, here's a few more examples. Here's some bearish divergence right here and a red tab, but the tab comes before the divergence, so we ignore it. Look at this. We get a red tab and divergence showing up at the same time. We draw a support level underneath it, and we'd sell Bank of America underneath that level of support. We could raise that level up over here because we got another red tab, and then it drops precipitously. You buy a put, you sell it short, whatever you want to do. Then it rises like a rocket ship up here, and you could be buying it on the 5-minute chart all the way upward because you see these divergences. There's a lot of really neat ways to implement this. Here's a dollar-yen chart on a 60-minute level. So let's just go back in time and we'll see this. Here's divergence followed by 3 red tabs. Let's draw that horizontal level underneath those 3 red tabs and sell the crud out of this as it drops. Here's divergence followed by a green tab. So we want to draw a resistance level above that, and then we buy it as it breaks out and above that, and that's a good trade. So this is going to give you a lot more trades, counter trend, trend trades, stocks, ETFs, currencies, whatever you want. I'm Rob Booker, and so you go to Indicators on TradingView, you click on my name, and then you get yourself a subscription to these awesome indicators. We'll see you around for updates maybe a little bit later on.